Boustead Heavy Industries Corp or BHIC says its planned disposal of a 20.77% stake in troubled Boustead Naval Shipyard to MOF Inc. has been extended by 21 business days as the parties involved require more time to fulfill conditions precedent to the ringgit deal. This after the expiry of the conditional period yesterday. The deal is part of Putrajaya's plan to take over the 9.13 billion ringgit littoral combat ship project that the shipbuilder failed to deliver on time. According to BHIC's past disclosures, there are 4 conditions precedent, including execution of a conditional intercompany trade receivables reorganization agreement to be entered into between BHIC and its naval shipbuilding business. The agreement was meant for the repayment of 383.94 million ringgit or such other sum owed by Boustead Naval Shipyard. BHIC's equity interest aside, Boustead Holdings holds a direct stake of 68.85% in Boustead Naval Shipyard, while Lembaga Tabung Angkatan Tentera owns 10.38%. Shares of BHIC closed 3.85% lower to 50 sen, giving it a market capitalization of 124.23 million ringgit. Unit holders of KIP REIT voted in favour of a proposal to acquire KIPMall Kota Warisan in Sepang for 80 million ringgit. According to its filing to Bursa Malaysia, the resolution was duly passed at its EGM after 87 unit holders who collectively hold 226.64 million units in the REIT, which represent 99.98% of voting units, gave the green light for the acquisition. KIPMall Kota Warisan houses a 1.5-storey retail centre with a net lettable area of approximately 17,300 square metres on a freehold land in Dengkil Sepang in Selangor. Shareholders also approved the proposed private placement of up to 12.27 million new units in KIP REIT to raise 10 million ringgit at an issue price to be determined later. This proposed placement will partially fund the acquisition. KIP REIT CEO Valerie Ong Pui Shan said it is on track to complete the proposed acquisition by the first quarter of 2024. KIP REIT units rose 0.56% higher to 89.5 sen, valuing it at 539.64 million ringgit. Former Prime Minister Tan Sri Muhyiddin Yassin cited his successful application to strike out his abuse of power charges as grounds to set aside his 3 money laundering charges. In the application, the Pagoh MP also sought to be granted a discharge not amounting to acquittal. Last month, the Kuala Lumpur High Court discharged him from the predicate offence of abuse of power, as the charges did not disclose any offence committed and were made without basis. Muhyiddin is arguing that his money laundering charges are similarly baseless and should also be struck out on the same grounds. The Bersatu president is accused of receiving from Bukhari Equity 200 million ringgit, which was placed in the party's bank account. The Sessions Court will hear the application on November 29th. Meanwhile, the prosecution is appealing against Muhyiddin's acquittal on the abuse of power charges, with a hearing fixed for next February. It also wants a stay of proceedings at the Sessions Court, pending the decision of the Court of Appeal. Astro Malaysia Holdings saw its share price continue heading south, hitting an all-time low of 40 sen a week after the release of its quarterly earnings, which missed consensus estimates. The stock has plunged 61.2% from last year's peak of 1 ringgit 3 sen in end March. That's a cumulative 3.29 billion ringgit, which has evaporated from its market capitalization over the past 18 months. Investment analysts broadly hold rather bearish valuations of the pay TV group, with the lowest target prices at 35 sen pegged by KAF Equities and 38 sen by M Investment Bank. The median target price stood at 47 sen. Overall, 6 out of 12 analysts tracking Astro have a sell recommendation on the stock, while the rest are recommending clients to hold onto the shares. Astro's historical dividend yield has soared to 7.5% though, following the sharp fall in its share price. Still, a high dividend yield may not be enough to outweigh concerns revolving its dwindling subscriber base, as well as its recent move to revise its dividend policy. Shares in Astro paired losses to close at 41.5 cents, still down 5.68% for a market value of 2.16 billion ringgit. Think tank ASEAN Plus 3 Macroeconomic Research Office or AMRO found no reason for Bank Negara Malaysia to intervene in the weakening ringgit, as other currencies from the ASEAN region have also depreciated against a surging US dollar. AMRO chief economist Koh Hui told a virtual media briefing that the ringgit is not the only currency that is weakening. He noted that while it may be true that it is weakening at a slightly faster pace compared to other regional currencies, as long as it doesn't pass through in terms of high inflation, there is really no reason for the central bank to react. The ringgit, which is hovering at around the 4.72 level against the dollar, has been logging losses for 3 straight quarters this year. Koh pointed out that Malaysia has strong fundamentals in terms of economic activities and noted that Malaysia's inflation rate has eased faster than expected to 2.5% in August. AMRO kept its inflation rate forecast for Malaysia at 3.1% for the rest of 2023.